Good afternoon, everyone. Welcome. Sorry for the delay here. We had some technical difficulties again. Still working out all the kinks. This is definitely new for us. So thank you for your patience, and I hope everyone can tune back in and check this out because we've got a great guest on here today. So if this is your first time tuning in, just remember you can ask any questions. Just type them into the comments section. We're trying to provide resources of different professionals, to help provide some insight and some professional information to how to navigate and handle the whole COVID-19 situation and definitely the impacts it's had. So I'm really excited. Today we have RBC mortgage specialist Ron Bertolo from RBC on to discuss things about COVID-19 and how RBC is helping. So I'm going to invite him on here. Just let me get him here. Hey, Ron, how are you?
I'm great. Thanks so much for having me. I know there's a lot of uncertainty right now, so even if I can provide the slightest bit of certainty to one person, that would be great.
No, I really appreciate it. And Ron, we've had the pleasure of working together on several transactions, and both Amanda and I, we've been talking about professionals to bring on, and we thought you'd be great for a few reasons. You're great at servicing clients, and we always enjoy working with RBC, and they always got some great programs and stuff that definitely wanted to talk about today. So thanks for coming. Now, Ron, yeah, let's start a bit about yourself. Tell us a bit about yourself, your role at RBC. What is a mortgage specialist?
So I work with clients directly with their mortgage needs. At RBC, we are the largest financial institution, the largest company, and the largest mortgage provider in Canada. So any financial question you might have, we have an answer to. However, myself in particular, I focus on helping clients with their mortgages, whether that's purchasing for a first time, purchasing for an investment property, switching your mortgage provider, or looking to do a refinance. I can help with any of those transactions.
That's awesome. That's a great thing. We've had clients that maybe haven't necessarily been ready for a mortgage, but you're able to identify that situation and point them to someone in the bank that might have a specialty and with some other products to get them ready for a mortgage. So that's a great thing.
Yeah, that's exactly it. So, to say a little bit about myself, I moved to the London community to go to Western. I've worked for RBC for 5 years now, 2 years now in this role. Prior to this, I was in other roles. So, yeah, it gives me a bit of background to be able to help clients with other needs that they may need.
No, that's great. That's great. So, as I said earlier, we thought it was especially important to have someone from one of the largest financial institutions on today to talk about, what you're seeing on a day-to-day basis, and speak specifically about what the banks are doing to help Canadians and their clients through the whole COVID-19 pandemic. So Ron, let's start by talking about RBC and what is RBC doing to help clients during these times.
So we recognize that every client situation is going to be different, whether it comes to a mortgage, which I can help with, or if you're a small business and you need help in that respect. But RBC has many different programs. So to date, we've processed over 250,000 loan deferrals. We
Wow.
have donated 4.6 million to help with COVID-19 and a variety of different programs. If you qualify and you have a credit card with RBC, we've cut the interest rate on that by 50%.
Wow.
We've enabled direct deposit from the CRA if you qualify for any of their programs, so you can get that cash quick and easily. We also recognize that we're an essential service. So our branches, although they're on reduced hours and reduced locations, they remain open to help clients. And then we also, through our phone channels, we've had an unprecedented amount of calls
Can't
on a
imagine.
daily basis. So there's so many different ways and channels that you can reach us depending on what it is that you're looking for.
That's great. Now, you talked about a few of the different products that you guys are doing deferrals on, and it's been a big question, and we're seeing it in the news quite frequently that the big banks are deferring a large percentage of their mortgage portfolio, payments, and I've seen up to 6 months. So what does that mean, and how does one go about doing that?
So there is some criteria that you have to meet to be able to do that. If this is financially impacting you, to make it short and simple, if COVID-19 has financially impacted you, you are able to apply for a mortgage deferral. We'll give you a deferral for up to 6 months before you need to resume your payment on your mortgage. And you can do that not just with your mortgage, but also your car payments or any other type of loan that you might have.
Okay. Okay. Now, I know some of the mortgage products offer, I think it's skip a payment or pause a payment. Is this the same? Would someone go about doing that? Like what's the difference?
It's being administered in the exact same way. RBC
Okay.
allows any of their mortgages, provided that they're not high ratio, for you to skip a mortgage payment. And this is being administered in the same way. However, to skip a payment, you can only do it once through your online banking. However, we're allowing this to happen up to 6 different times. And the other thing that's important for clients to understand is if your mortgage is high ratio, you're going through CMHC to skip those payments. So prior to COVID-19 even happening, we weren't allowing, or we don't have the ability to allow a client with a mortgage that's high ratio to skip a mortgage payment, but we've always allowed it 1 time per year for our conventional mortgages.
Okay. Now, for people that are watching and don't know, what do you mean by a high ratio mortgage?
So if you have a high ratio mortgage, that would mean you put less than 20% down. So when you took out your mortgage, your down payment was less than 20% of the purchase price, and you went through both a financial institution and through CMHC or one of the other default insurance providers. Another one would be Genworth here in Canada.
Okay. Now, I've talked to a few people, and they stated that they have the funds to continue paying the mortgage, but they have somehow been affected, whether it be through a layoff or something like that. Do you suggest people that have the funds defer their mortgage payment? Because I know they always say cash is king. So is it something you take advantage of, or what are your thoughts and recommendations on that?
If you have the cash on hand, I would continue to make your mortgage payments as scheduled. Um, at the end of the day, there is an interest cost to deferring payments. So the way your mortgage works is we match the funds with a borrower, and at the end of the day, we match savers' funds with a borrower's funds, and at the end of the day, the bank does owe funds to another party.
Okay.
So not to get into too many details there, but if you can continue to make your payments, you should continue to make your payments as is. And we've also seen some clients who have come to us wanting to defer payments, but for an example, they have 6 figures sitting in their checking account. That's not necessarily a client that qualifies to
Got
make a
it.
mortgage deferral.
So there's a whole set of criteria that's someone now to do that. Are they calling you the mortgage specialist, or are they calling the 1-800 number and going through the phone lines?
So you can call the number on the back of your debit card,
Okay,
or you can reach out to your local branch. If you reach out to me, I'm more than happy to point you in the right direction to the person who is at the nearest branch located close to you.
got it, got it. So you mentioned and I'm sorry I keep focusing so much about mortgage deferrals, but I know there's been a lot of questions and we had a lot of people reach out about it. So when you're doing the mortgage deferral, those payments, they're added on to the end of the mortgage. Is the mortgage extended? How does that work?
That's exactly how it works. So those payments are still owed, but they're added to the end of the term. And RBC, like I said, has always allowed clients to do this just to have a bit more flexibility. However, in the past, we only allowed it for conventional mortgages. Now the government's also allowing it for high ratio mortgages.
Okay. Okay. So that leads into my next question was, do CMHC insured mortgages qualify for the mortgage deferral? So to answer that, yes.
They do qualify, yes.
Perfect. Perfect. Well, that's good. Did we cover everything in terms of the mortgage deferral? Did anything that we missed? Anything that I didn't ask you that we should address?
I believe so, but the important part there is if you have any questions to reach out. And even if you're unsure if you qualify, but want somebody's opinion, because every situation is so unique. So just reach out if you're unsure.
Perfect. Perfect. And we'll share your information on this video link at the end. If anyone wants to reach out to you directly, they can do so. And if there's anything that we didn't cover that you don't ask or anything like that, please reach out to one of us and we can connect you with Ron, or you can reach out to Ron directly. So that's great. So let's switch gears a bit. Want to discuss the process of obtaining a mortgage approval. What is RBC looking for in that approval? And has COVID-19 changed the way RBC does an approval?
So that's a great question. COVID 19 is very fluid, things are changing very quickly. At RBC, things have not really changed in any way. Our systems are the exact same. The things that have changed are little things. So typically, when it comes to obtaining an approval, what I do is I meet with a client, we do a pre approval, they shop the market, they find a home, we then convert that pre approval to a purchase. We submit that application with an appraisal. In this step, nothing has changed except in the past, we would have met in person. We're doing all of this so far now by phone and online. When it comes to the appraisal, our appraisers are texting the clients to get photos of the inside of their homes and then just doing a walk by on the outside and the front of the home. So it's just little changes that have happened. Our adjudication center would then get the file to approve it, and then it would be sent to our home equity closing center to be sent off to your lawyer for closing. And none of this has changed along the way. The process hasn't changed, just small details along the way have changed.
So you guys are adapting, which is great, and that's a great thing with this technology is we can adapt and use the technology to do
Yeah.
those meetings and that kind of thing. So that's great. Now,
There's a bit
yeah,
of a learning curve to it, but that's the fun part, interesting part.
yeah.
So just one thing that I'd say is the biggest change at RBC is we used to have to meet with clients in person to do signings. When COVID-19 started, literally overnight, within a week, we started a new platform. So now we are 100% digital when it comes to signing.
Wow, that's amazing. That is great. Now, so if someone's received a pre-approval prior to the whole COVID-19 pandemic, their approval's still good. Has anything changed in that sense? Is there any more documentation? What if they've lost their job? What how's RBC handling that?
So the great thing about dealing with RBC is everything is straightforward. If you are employed, we need your T4 and most recent pay stub or a letter of employment and recent pay stub. If you're self-employed, we always need 2 years T1s and notice of assessments. It's very straightforward with what we look for. If you have a pre-approval and your conditions haven't changed, then the pre-approval is still good. However, if you have a pre-approval but your employment has changed, that's going to cause some issues because that pre-approval would no longer stand. A pre-approval is not the same as an approval. So RBC, as you know, offers something called a firm approval,
Which
and
I
we do
love.
that. Yeah, which is awesome. We do that
Yeah.
for every mortgage, but we can't do it with a pre-approval. The reason we can't do it with a pre-approval is because we have no idea what property a client is going to take that pre-approval to purchase.
Yeah, and that's often a conversation that we have to have with people, and I'm sure you're the same when people walk in. They think that pre-approval means that they can go out and buy up to that price. there's obviously things that have to take place. For example, you mentioned an appraisal. Obviously the house has to meet those,
Yeah.
that number, right?
So, what's important for people to know is a pre approval is a great first step because it approves you as the client. However, it doesn't approve the transaction necessarily.
Got it. Got it. Okay. So the steps in that are obviously, submit the paperwork, the bank orders an appraisal, and then you guys do your behind the scenes work.
Yeah, so after you've gotten your pre approval, you found the property, RBC issues what's known as a firm approval. And this is really what one of the many things that differentiates RBC from all the other mortgage providers. And I'll say why I think we have a quarter of market share in Canada approximately is this firm approval part here. So if you purchase a home and the closing is within 4 months, we can issue a firm approval. What that means is we do the appraisal and the credit check up front. So once the file's been approved, we don't revisit that. We don't do another credit check. We don't do another appraisal at the week of closing like many other institutions do. And that's just with a purchase. Think of this scenario here. You might be building a home. Building a home, we can give you a firm approval up to 3 years in advance.
Wow.
So you can have a firm approval 3 years prior to the closing date, provided that the mortgage amount does not change. But if your job changes, if your credit changes, it doesn't matter. You have a firm approval.
Yeah, and I think that's such an important conversation because we've had buyer clients that they get their approval from a lending institution, property goes to close, and they're either relocating or they bought a new vehicle and it's changed their credit. Some of the institutions will go pull that credit a few days before it closes, and then we have issues.
Yeah.
So I think that firm approval is something that we always like with RBC is because it gives you that peace of mind. You don't have to worry.
It's really important. And what's ironic about it is I find my clients worry more than what I do because I know the firm approval process. So, for example, in February, I had a client switching a mortgage, and that was approved in November. And she contacted me a week before panicking because she had just switched jobs. And she said, "Do you need to change my mortgage now?" And I said, "No, it's firmly approved. It's a done deal."
Yeah, no, that's great. Now, shifting gears a bit, the question I'm sure you always get is interest rates, and we've seen also, with the mortgage deferral in the news, we also see quite a bit about interest rates. Bank of Canada slashing their interest rates. What does that mean for people that don't understand how the interest rates work and all that? And then the second part of the question is, where do you see interest rates headed?
So that's a great question. So when it comes to a mortgage, you have two different types of rates that you can look at. You can look at a variable rate or you can look at a fixed rate. They're completely different products. So the variable rate is tied to the prime lending rate. So when you see that the Bank of Canada is cutting rates, that's only applicable if you have a variable rate. And it's important to know that the variable rate is tied both to the Bank of Canada's rate and to the individual financial institution's prime lending rate. So, what that means is just because the Bank of Canada cuts or increases rates, it doesn't always necessarily mean that the individual institutions will, but it normally does. And then when it comes to fixed rates, they're tied to the bond market. So it's a completely different product. And then the second question that you had is where do we see rates going? Currently, we're seeing variable rates drop. We're seeing variable rates drop as the government produces monetary policy, meaning the Bank of Canada cuts rates. On the other hand, we're seeing fixed rates increase. The reason why we're seeing fixed rates increase is because the cost of borrowing is going up. And that's for a variety of different reasons. Money is being withdrawn from markets, which is making the cost of borrowing go up. And it's costing institutions more money to lend with what's going on with the mortgage deferrals and everything that's happening.
Interesting. That's yeah, that's really, so there's so many moving components to the interest rate that affects it. Now, where, I'm sure you guys have been having internal conversations and all that. Is there anything that you foresee changing in the future? The way we do business, the way mortgage businesses, do you foresee anything?
We don't foresee anything. Honestly, things are changing very quickly, but when
Yeah,
it comes to our firm approval process and the process by which we get a mortgage approved and we help clients, we don't see that changing. And COVID-19, it has tweaked the process a little, but not much has changed. Like I said, the appraisal is done now in a different way, and the way we stay in contact with clients has changed. Other than that, nothing really has changed. We Another thing that's tweaked the process is the huge volumes of calls we're getting on a daily
yeah.
basis. Um, so, what I'm trying to stress here is that there's been tweaks to the system, but overall, things on RBC's end remains the exact same. This isn't the first crisis we've had. We had the recession around 10 years ago, and every setback we've had as a society, RBC has come out stronger as an institution and grown over that period of time. We're always here to help clients in any way that we can. So I want people to know that if they have any questions, they shouldn't hesitate to reach out.
Well, that's great, and really, I thank you so much for answering the questions you did. It's great. There's a lot of people that are uncertain, and that's why we're doing this, to bring people like you here to answer any questions, and hope put some ease into the situation. So, is there anything that I didn't cover that you want to discuss? Have I missed anything?
You haven't missed anything, but I just hope we can bring some certainty to people. So if they have any questions, just don't hesitate to reach out. And also, at times like this, I think it's important that we all take care of ourselves. There's a lot of stress, so however that is, if you can take care of yourself during this time, that's also important.
Yes. Yeah. No, it's a great
Little
point.
things are important.
Yes. No, it's very true. Very true. It makes you realize. So, well, thank you so much for coming on. If anyone has any questions, we'll wait a minute. I don't see too many comments there. I know there is a bit of a delay, so just we'll wait a second here if you want to type in a question. If not, you can reach out to us after, and like I say, we'll definitely connect you with Ron, and be happy to answer any questions.
Thanks so much, James.
Yeah, awesome, very good. We'll just wait one moment here. And doesn't look like. Okay, I think we're good. I think we're good, Ron. Awesome. Thank you so much, and you have a great day and stay safe out there.
Thanks for having me. Have a great
Awesome.
afternoon.
Talk to
Bye.
you later. Bye bye.